Another week of all-time high weekly candle closes for the S&P 500 and the Nasdaq. Markets liked the cooler PPI data and shook off the higher CPI and the very bad jobs numbers. The markets are really climbing the wall of worry as we move into FOMC next week, and with semiconductors breaking out after nearly 2 months of consolidation, Tesla making a very impressive move, and crypto seeming to have found a bottom despite what some of the weekly indicators were telling us. Will that euphoria last, or will FOMC throw a spanner into the works? Well, I have reviewed the last 100 years of post-election year data to see what we can expect August through October, and we may be in for a bit of a surprise. So join me as we get into the key charts for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a great week. It was a wild one out there with a ton of names breaking out, some crypto treasury plays going absolutely mental, and risk on really starting to come back into the market. Of course, likes, comments, subscribes, those are always appreciated, but let's get straight into the content. I want to cover three main things before we dive into the charts. First, a macro outlook for September and October, since Rectember seems to be on hold unless FOMC disappoints with no rate cuts next week. We're watching you, Jerome Powell. A quick RSI lesson to help you sharpen your trading skills during an aggressive uptrend. Applies to a downtrend too. And I'm bringing back my all-time favorite segment, Dumb Chart of the Week. First, looking at seasonality and analyzing the past 100 years of market data, we had a positive August for the S&P 500. And right now, the signs of Rectember are nowhere to be found. But we've been in a fairly dull, upward grinding market, and as the old adage goes, you don't short a dull market. So are we going to see a correction? Well, if we're looking back at the last 100 years of data, for post-election year data specifically, the years that saw a positive August actually had a correction land in October instead of the traditional September correction. Now, this is interesting to me because if things keep running post-FOMC, I don't think most folks would anticipate a bump in the road quite this soon. Do I think it's going to be a big correction or a long correction? No, I think it's going to be short and sharp if we see anything at all, but it would be enough to shake some folks out of their positions. So be ready for something like that. Don't get shaken out. And it might be our last good opportunity to enter before a meaningful fall run. So stay ready for any opportunities like that. That aside, a couple of you were asking about how to read RSI for entries when charts are remaining elevated on major runs like we've seen in crypto the last few days. And I wanted to take a moment for a quick educational break to cover that specifically. So let's launch the Solana chart. Okay, here we are on Solana on the 4-hour chart, and some of you have been asking about how to identify entries during the middle of an uptrend, because we often look for either overbought conditions here on the RSI and on mean reversion, so overbought spiking above 70 and oversold getting below 30 as key exits and entry points. And when you're in an uptrend, you'll notice that between these two bottoming points, there is a 6-week window from the 7th of April to, when was that? The 28th of May, where we did not come back down to the bottom of the range. So if you're not in a trade and you're playing perps, how do you know when to get back in? Well, when we're in a strong uptrend like this, the RSI will often form a new bottoming level. And if we look at the trend right here, you'll notice that we are finding that bottom right around 38 on the RSI. So if we zoom in just to this particular uptrend right here, you will notice that we have a touch point here at 38, another touch point at 38, and another touch point where we tried to bounce. This was right at the price action breakdown. And as soon as we lose that level, then we reset the chart and we are also entering this downtrend. So identifying what the RSI support level in an uptrend is based on your time frame and the asset you're trading really helps you to identify good entries. Now, if we look at this next uptrend, and this was from the Israel-Iran conflict bottom, and that was on the 22nd of June, our 4-hour RSI bottomed again right here. We started in this uptrend and we did not have another bottom in the 4-hour RSI until the 1st and 2nd of August right here, where the RSI was resetting. And during that time, during the uptrend, you'll notice that we also found a clear base on the RSI, which this time was right at the 40 level. And I'm extending it to this next run up right here. And we bounced there. But you'll notice that all of those bounces along the trend line, lining up with the RSI, are great entries if you are playing perps. Now on this extreme drop down from that high, we just deviated underneath. This often foreshadows a breakdown that's coming. We had let's say, a sucker's rally, and then we eventually broke down. Now in this next rally up into where we are currently at just over $240, we have had the same thing. This has not been as clean. This rally has actually been marked by a lot of indecision. And if you pull up the double cloud on the Confluence model, the price action in this chunk in particular right here has not interacted with the double cloud model like any price action I've seen on Solana over the last 2 years. So this is a bit of an anomaly. I think there's a bit of tug of war going on between the bulls and the bears, and that was reflected both with how this was interacting with the double cloud. We can just turn that on really quickly just so you can see it, and how it was interacting with the RSI. But for all intents and purposes, with a little bit of variance, this still held true. And if we go back to any past rallies in Solana, you will see that. And just to illustrate the point of what I mean with how price action interacts with the double cloud, most of the time we take a trip through the upper cloud, center cloud, lower cloud, center cloud, upper cloud, center cloud, lower cloud, center cloud, upper cloud. And here it was really just chopping back and forth between the middle of the center and the upper cloud, which is very unusual for the price action to do. So anyway, aside there, but I hope that helps you on how you can identify strong RSI trends and identify those new bottoming levels. Now, the inverse is also true in a strong downtrend like we had here. It was not quite as clean. This was when President Trump announced the strategic Bitcoin reserve, but for the most part, we can also identify a fairly clean resistance. This, I would say, is actually a bit more of a resistance range, where we would consider this a range from 58 to these tops here at 62. But that was still keeping us suppressed during that entire downtrend. So I hope that is helpful. Okay, lastly, let's bring back my favorite segment, Dumb Chart of the Week.
Dumb Chart of the Week.
Look at this dumb chart. Up over 4,500% in one day to then dump 82% over the next 3 days. What is this dumb chart, you might ask? It's 8Co Holdings, the company that decided that launching a WorldCoin treasury, yes, Sam Altman's Orwellian spy coin WorldCoin, would be a great idea. And there was a ton of hype behind it, with the likes of Tom Lee backing the project and Dan Ives taking the helm as chairman of the board. Between those celebrity names and slapping together the hype behind AI and crypto, apparently that is all you need to sucker in billions of dollars. But if you are basing a treasury off of a coin with a chart like this, which basically resembles a massive Head and Shoulders since the launch, I would personally rather put my hard-earned money behind the relaunch of Toys R Us, backed by, let's say, Jared from Subway as a spokesperson. Before you go crazy in the comments, no, I am not comparing Tom Lee or Dan Ives to Jared Fogle. I actually like and respect each of them in their own right. The point is that building a treasury company off of a shaky asset like WorldCoin is like putting a pedophile in charge of a children's brand.
Dumb Chart of the Week.
All right, that was a fun deviation. Now let's get into the not so dumb charts that we were watching. All right, starting here on the S&P 500, and not much to say outside of the fact that we made a new all-time high weekly candle close. We were, in a consolidation pattern here during August, and we have broken out of that and really made a move away this week. So let's just keep watching this. The risk on sentiment definitely came back on. Semiconductors started moving this week, and that is also reflected in this move up. If we pivot over to the Nasdaq, which was lagging behind and had not made new all-time highs, finally made new all-time highs towards the end of this week, and the Nasdaq was outperforming the S&P 500, which is also reflecting that risk-on sentiment. Moving over to SMH, the Semiconductors ETF, which we discussed on Monday, and I thought being in this wedge pattern, we might well compress a little bit more before breaking out, but no, risk-on came back into the market the latter 3 days of this week, and we broke out to the upside here on SMH. If we are treating the last 2 months of consolidation as a giant bull flag, and we map out price targets from the April 7th bomb to where that could take us, that would put us at around just over 400, and that would be around December 18th if we're using it as both a price and time extension. And percentage-wise from where we currently are for the semiconductor space, that would be a 33% gain from here, which would be quite impressive. As we look into the individual names, you will see that the smaller semiconductor names are still doing better than the sector leader, NVIDIA. And as the first smaller name in the space, first we'll pull up MU, Micron Technology. And this is one that we have been in since, when was this? The 29th of July? Oh, so not that long, I guess, in the trade. But we just came back this week to test all-time highs at $157. You can see the last time we made that high was way back on Thursday, the 20th of June, 2024, not this last June, 2024. So it has been over a year, and we are retesting those highs right now. We are up for 8 straight days in one swing. As we often talk about with Gann rules, anything over 7 bars in one direction has a higher chance of a sharper correction. If we are looking to the daily RSI is also getting extended, although it could run a little bit more, so could mean reversion. But I got out of my calls because I wanted to reduce my exposure and take some off the top. I still have my spot for the time being, but this is looking like it should cool off. But crazier things have happened and markets have run irrationally. But I was happy to take profits into resistance, a previous all-time high, and also just seeing the elevated levels that we are at on RSI and mean reversion. TSM has also been running, and if we are also considering this a giant bull flag and we're doing a quick price and time extension, that would take us out to almost $340, and that would be around the 12th of December for this particular name. And if we're looking at a percentage gain from current levels, we would be looking at 30% to the upside, so confluent with the 33% to the upside for the overall semiconductor space. If we are looking at RSI and mean reversion for TSM, it is not as extended as Micron Technology. So this one would be indicating it could go a little bit more within this move. And I always like the Confluence Model outer cloud as a generalized target. So that would be at 283.46, where it stands right now from the current $259. And if we lastly look at NVIDIA in contrast, you will see that obviously NVIDIA has not broken out like TSM, and it has not performed as well as MU. We actually had this structure of a daily lower low here and a lower high as of right now. And we are also retesting the Confluence Model center cloud. Often after a big move up, you will notice that you break into the center cloud and then you reject from that band. We found support from it right here before a continued move down. Doesn't really make sense with how strong the rest of the semiconductor space is, but the moving average bands, how this is interacting with them, would signal that there are instances where a name remains really strong, and we've seen instances like this in the past where it just chops around in the center band for a while and even deviates above it before finding that eventual correction. But the general travel is usually a trip in the upper band followed by a trip in the lower band. If we just go back in time here, there was an instance of continued strength where we had that trip in the upper band, center band, and instead of going into the lower band, we continued for one more trip up. So whenever I don't see that normal pattern of upper band, center band, lower band, It's just telling me that the opposite is true, that there's extreme strength in the name. So we just need to watch to see how this is going to unfold. And the Confluence Model Cloud can be a great guide, as well as obviously reading the raw price action as we always do. DXY, still looking weak, still doing nothing. Total time for analysis, 5 seconds. Also, my apologies. I noticed that there was an error with the recording software and it was populating the recording window above TradingView here for the first couple charts, but I've got it alleviated now. Moving on to gold, where we can see that after that run last week and the beginning of this week, we have just started stalling out for the latter 4 days of this week, and that coincided with sentiment, from sentiment being more of an inflation hedge style market to one that is going risk on again. And we saw that with the Nasdaq finally playing catch up, and with semiconductors starting to run, as we just looked at in all of those charts. And gold is just a great sentiment gauge, both for when we're in a risk off style market and when we are in that kind of inflation hedge style market. So the difference between the two, if gold is running and equities are selling off, that's risk off. If gold is running in tandem with equities, but it's more of a broad-based rally as opposed to some of the riskier equity names, then it is a flight to hard assets and an inflation hedging style environment. So a lot we can learn from sentiment just by looking at gold. That's why we always check in with it. Okay, starting with Bitcoin, and we had those 3 weeks, which, as we were saying, often point to one more short and sharp correction to just really wipe the lows, to create a fear bottom, to take out the leveraged longs and reset sentiment. We haven't seen that, but we also saw our key pivot point passed at 113,500, and we have had a strong recovery from there. Once we go into the daily, you'll see an inverse head and shoulders pattern that is pointing actually to 119,500 as the target. So out of this entire bull run, we have seen about 6 instances of 3 down weeks, and only one of them didn't have another correction. That was the early 2023 Silvergate Bank collapse, and that one recovered right away. I was anticipating we would see this, but we need to see how this unfolds. And right now, it seems like there is strength coming into Bitcoin and the crypto space more broadly. And maybe this is instance 2 of not seeing another correction. If we do just take a look at the weekly RSI, I do want to see us reclaim that 62 level on the weekly RSI. That would be great to see. And we still have 2 days left for Bitcoin to do that. So watch the weekly candle close on Sunday evening, and Sunday evening in the US. And that would be a great sign of strength for Bitcoin if we can close above that 62. And if this rally continues, I imagine that that would be the case. If we do switch over just briefly to the daily time frame here, you can see that inverse head and shoulders pattern right there. And if we measure out our neckline, which I already have a resistance line drawn in right there, and we just take that from the low and map it out there to our breakout candle, that puts us in line right here at 119,600, which corresponds with all these previous tops. As I've said in other videos, whenever you map out a price target, you want to look to the left on the chart and say, does it make sense with previous resistance? And I've got a resistance line drawn right in there. We have all these previous tops where our daily candles just couldn't close above. So that makes sense as a logical target. And again, this isn't a number to the dollar and cent. Think of this as more of a range. Give it some tolerance. If we are looking at Solana and we are starting here on the weekly, you can see that things are looking very strong, and we still have a ton of room to run on the weekly RSI. I'll just double click into the price action here and take us back to the daily. I am so sorry. We are back on my messy chart with all the lines. I know I promised that we would go to a clean chart, but you know what? This one has the better analysis on it. Now, we do have 7 days up in one swing, which we know can often lead to a turnaround point in the price action. We also have resistance right here at $244. If we go back to the left, we can see how 244 aligned with all these previous peaks here. So we are just into that resistance, and we also hit our price target. We had a wedge pattern here where you can maybe see my light lines, and the price target for that was this line right here, which was at about $237 to $238. So we exceeded that price target in this swing, and we are just rejecting a little bit from that line. Now we have one higher price target, which is this massive ascending wedge right here. Sorry about the bad drawing skills. I can't make a straight line apparently. And ascending wedges have a 68% chance of breaking to the downside. I think we talked about that on Monday, but this broke to the upside, which would put our price target here at about $275. And if we look left on the chart to see if that makes sense, that aligns roughly with this candle here at 273, these previous highs, and is just shy of our all-time high. So it makes sense as a rough price target. I don't think we are going to get there in a straight line. Granted, the ETFs are launching and there's a lot of hype in Solana right now, but it would be good to see the charts cool off a little bit and to see a little bit of a correction. If we're looking at the daily RSI is just starting to get a bit overheated. We know we can run a bit more on the daily RSI, but if we have one of these extreme spikes, and I think we're just starting to see that with this daily candle here on Friday, these more extreme candles that are out of character with the price action that we normally see, it can often lead to, I guess, let's just say a little bit more of an extreme correction. If we were to get a really big correction, I would anticipate very strong support coming in at this zone here at $225. That would correspond with the breakout of our wedge pattern and just this red zone that I have drawn in from going back in time as a really key consolidation zone at our previous two high points, where we really pivoted around that and found resistance and found support again. This has just been a very, very key level for us. So a pullback into that range would make sense. If we look to the 4-hour chart and we're looking to mean reversion, we are 2.3, 2.4 on the mean reversion, so quite overextended. The 4-hour RSI is also quite high if we compress our price action. We did get a little bit higher here in July on that little peak, but we are close to really the limit. Right here, we tested this line. When was that? That was our all-time high back in January. So I don't think this is going to have too much more to run, although crypto can always surprise you, but it seems like a correction is in the cards. If we want early signs for where to anticipate a turnaround, if we just look at the 1-hour chart right here, and I bring up this trend line, we have this underside support on the 1-hour, and then we have our major 4-hour support trend line down here, which I'll bring up in a minute. But breaking this uptrend to the downside, it would be your first sign of a more meaningful turnaround coming. And in strong uptrends and with a good macro backdrop, it is always riskier to short, but it could be your key to short as well. If you go to the 4-hour time frame and we look at the two trend lines we have on the 4-hour, these would be our next points on the chart to anticipate support if that trend line on the 1-hour fails us. And then we're just looking to see if the 4-hour or the 1-hour RSI is fully reset to the bottom of the range as we get into one of these support areas. And if that is the case, then we can anticipate that a bounce is most likely. Now, Ethereum, yes, sure, on the 4-hour, it's overheated as well. It has been lagging behind Solana the last couple of weeks, but it just broke that key pivot point that we talked about on Monday, this $4,500 level, where we tested it once, twice, thrice, and had our favorite 4th time breakout. And we broke out yesterday, back tested it for support, and have moved away strongly since. Yes, the 4-hour RSI is a bit overextended. If we change this to the daily time frame, the daily still has a good amount to run. And while this might cool off in the near term, I don't think this is going to correct as severely as Solana, and I think it has a little bit more gas in the tank. If we're just imagining our clouds here on the 4-hour expanding, it could most likely do something like this, retest all-time highs, maybe even take a third swing before cooling off, because once we get into the upper band, the most common path of travel is that we take 2 to 3 swings. So I'm now looking, I just got out of a long on this, actually on Bitcoin, on Fartcoin, ADA, a lot of things. And I'm looking for a little retracement level to get back in and play that next leg to the upside. All right, MSTR still doing nothing, but that is not a bad thing because it is still finding support at our trend line here where we really want to see MicroStrategy bounce. And as we covered on Monday, we have a mean reversion dot on the daily mean reversion chart, daily RSI. We didn't fully reset, but close enough. MicroStrategy doesn't often get to the bottom of the range. And just like we talked about in the lesson with finding a support level for the 4-hour, MicroStrategy often bounces from the 32.8 level or 33 level, and we bounced pretty much exactly from that level right there. But the bit of hopium, and obviously we have to watch this trend line. If we break down, it's a different story. But on the 4-hour, if we're just going in on the 4-hour and we are looking at the Confluence Model Cloud, and let me delete these fib levels really quickly. You can see that on the 4-hour in the lower cloud, we took those 2 swings and we are just breaking back into the center cloud. So this is an early sign of strength. We're getting really close to the market here. It's a bit too soon to call a recovery, but if you imagine these confluence center clouds continuing on like this, normally we'll break back into the center cloud. Sometimes we get a retest, and then we start mounting to get some strength and eventually get back into that upper band. So let's see if MicroStrategy can do this. Obviously, it would be great if it respects the trend line and doesn't deviate like that. So let's watch it next week. It doesn't have to bounce quite that slowly. It doesn't actually have to do that retest. Sometimes it moves away really strong like that, will reject, and then continue into the uptrend like so. So I'm hopeful for MicroStrategy. Bitcoin's starting to move, but sentiment has been bad. The stock has been bad, and let's see if we can get a turnaround. And I actually bought a little MicroStrategy this afternoon. So really keeping my fingers crossed. I haven't bought MicroStrategy in a while. Okay, moving on to Tesla, which finally did something. Elon made you wait through a ton of pain and a ton of fights with the president. Oh, the emotional drama of holding Tesla, and you finally get your reward. Congratulations to you if you held through all of this. It's had its breakout. We are not yet at our price targets, but we are moving along nicely. And what we said on Monday, our key level was this $367, which is a past resistance and support level. It's also where we rejected right here in May of this year. If we go back in time, you can see how it played both resistance and support and resistance again. It's really our critical level in this upper end of price action until really we get to that 440 level, which we'll discuss in a second. And our price target from this wedge breakout, we have this white line here, is right below that $340 level. So if we look to the left of the chart, we always ask, does this price target make sense? And yes, this price target makes sense. Now, these were 2 pretty darn explosive days that we saw here for the price action, and things are getting a little bit overextended. If we're looking at the 144 chart here, if they're overextended. But if we go to something more traditional, like the 4-hour, the 4-hour RSI is almost to the highest level here at, what is that at? That is at 85, where whenever we get up there, generally speaking, I mean, we've peeked our head above it a couple times, but Tesla runs do not last long above that level. Could we get right up to 440? Sure. Crazier things have happened. For a more sustained rally, you know, we talk about this a lot, but whenever there are these extreme moves, they either correct more quickly or they lead to a longer period of consolidation. So if we can have a steadier grind to the upside, that leads to something more sustainable. Right now, this is anything but steady. So let's see how it unfolds. But I would be happy, honestly, to maybe see this back tested for support before we continue on up and let some of the charts reset. That would, I think, set us up to surpass this price target sooner than later. But you know what? The market is going to do what the market is going to do. So we just need to see how this unfolds. But if we do head up in a straight line, then just watch that RSI, switch time frames, on the 4 hour. And, if we get up to the 90 range, which rarely happens, it would be time to consider going short on Tesla in the near term. I believe in it long term. Okay, and if we just bring that over to the pair chart, the pair chart continues to break down 93 level, and the next support zone is really that 0.8 level down below. Now, MicroStrategy is just finding a little bit of support. Tesla's still on the run. So this 80 level really makes sense to watch. Obviously, we need to let the pair chart lead and trust the trend flips that happen here. But I could see us getting into that, and then perhaps we chop for a bit and hopefully move in the direction of MicroStrategy again before too long. Otherwise, it means MicroStrategy is breaking. If this continues in the favor of Tesla, and it might be the end of MicroStrategy for this bull market, which I am hoping is not the case. Okay, I'm just going to go to a couple of Bitcoin miners because obviously some, like Iron and others, have already had a big run, but some of the names that we track here are starting to come back to life. As you can see here by CleanSpark getting a little bit of bounce this week, and we are just into a little bit of resistance, but this uptrend and the structure of higher lows the whole way up has still persisted. So that is saying to me, if we are going to maintain positive structure, we are going to pass these previous highs at $13.50, and most likely we would be attracted to that next area of resistance, which is the 50% level. The most important level in trading tends to be a bit of a magnet for the price action. So I could see CleanSpark, if Bitcoin continues to go on a run, going to that $15 level, and then we need to see if we're going to find resistance there or if it can push its way through. From here, that would be about a 48% gain from where we're at right now, and the daily RSI still has a lot of room to run. Looking at another miner name, Mara, which has not really bounced in the same way as CleanSpark yet, but it has that same structure, and it has just been coiling in a very, very tight pattern here all the way since the 31st of July, over a month of coiling. And the longer the thing coils, the longer the price action coils, the more explosive the move. We did just test the 200-day moving average today, found a bit of resistance. We're also at the 382 of this local move. But if this breaks out with the structure of higher lows, I would anticipate that we are going to pass this last peak at $21. We are currently at just above $16 for Mara. And I would venture to say that the 1618 level at $25 would be our next target. And to the upside from where we closed today, that would be a 56% move. So a little bit more than CleanSpark. All right, last miner name we will cover today, which is BitDeer. And BitDeer has been in this wedge pattern all the way, well, I guess if you consider the entry here, the 30th of April, but really between our first two touch points, the 21st of May. And we just broke out to the upside. The price target for this move to the upside is $21.90, so let's say $22. Does that make sense? Yes, we have these previous peaks. It is in the middle of this topping pattern and consolidation zone. So makes sense as a price target. There was already a really good move on it today, up about 15%. And if we look at what is left in the move, we would have another 35% to the upside. So if this pulls back and retests the breakout of the wedge for support before continuing on, that could be a great entry if you missed the move today already. And if we're just looking at the clouds are squeezing on the daily. We are getting into the upper band. So most likely these can expand again to the upside, and we would anticipate the clouds eventually doing something like this, allowing the price action to continue on up in that upper cloud for a couple of swings like we saw back here. Okay, HIMS we talked about on Monday, looking strong as we were in this zone down here, and it has continued to move away quite nicely this week. The question is, and really the only thing to watch on HIMS, is we had this underside support that was holding for us since the April bottom here, or the April double bottom if I'm going to be accurate. And the big question is once we get into this, maybe it's next week already, is that going to play resistance? And are we going to reject from there? And that is a perfect level to short from. And just mapping this out, that would align roughly with these previous peaks at the time we might intersect that. And it might also come at a point where the daily RSI and mean reversion are getting back to the top of the range to print another mean reversion dot. So this name has been moving by good percentages in both directions. And at least for me, with my options that I opened down in this zone down here, I would be closing them as we get into that trend line because they are expiring later this fall anyway. Okay, just looking at CoreWeave really quickly. On Monday, I talked about, was that Monday? No, that was Wednesday. Oh, sorry, Wednesday. In the big treasury update, I covered CoreWeave, that's right. And I exited my options position because we hit the price target. We were also into this 382 resistance line on the fib retracement, but that was the price target from the double bottom. I still think it's going to go higher. And the question is where do we find support? We had a good bounce today. We actually bounced right from these previous tops, which I would have anticipated a bit more retracement in the price action. So maybe this is just a temporary bounce. We haven't passed these highs yet, and it might correct a little bit more. But if we are looking to areas for support, I would say that we need to bounce, obviously before these lows to maintain our structure. And I would be looking, I know it's way back down there, but this consolidation zone right here, between, let's say, $91 to $96. We currently bounced off the $104 level. That would be an area of really strong support. And if we bounce a bit sooner, that even $100 level, because of these previous peaks right here in this consolidation area, would be another area to anticipate support. And maybe that would allow the 4-hour RSI to reset a little bit more, as well as mean reversion. On the daily clearly still has room to run. So I don't think this is the end of the daily uptrend. It is just a little bit of a correction and stair stepping along the way. And I have my alerts set here to allow me to be ready to act on whatever the chart does if it presents an opportunity. Circle is continuing its bounce, and it is starting to build good positive structure. Let me just make this a little bit bigger. We were saying on Wednesday that it's still early days to call the recovery, but we did break out from this falling wedge pattern, which has a price target back up here at $200. And just looking roughly at the structure, we had our lows. This previous swing high, we made a little higher high, higher low, slightly higher high, just barely than this one, so not bad. Higher low, maybe we bounce from around 118 next week, and then see, this was also a fib level right here, the 382 that we rejected from, and see if we can mount a bounce, maybe to get all the way, probably around 150. Psychological number aligns with where the center cloud is, would be the next target, and then the 50% at 166 after that. So let's just see if this can mount its recovery. In terms of the macro backdrop for Circle, rate cuts, I think, are going to hurt it. Obviously, it cuts into some of the returns they're seeing there, about 12% loss in revenue for every half basis point cut. And in terms of them getting more market share, Tether just expanded into the US. I don't know exactly when they're launching. Hyperliquid is making their own stablecoin, moving away from USDC. So they do have some headwinds. The chart is showing positive structure, but if this rebounds to the $200 level, I would get out and I would just be watching the space for a bit with all these developments. Okay, one we haven't covered for a while, and another messy chart, SMCI, which really got beat up on earnings a few weeks ago and has been in this downtrend. But the downtrend, you will notice, bounced off of this previous resistance line, now flipping it into support. And we also bounced off the 200-day moving average a few days ago. And this looks like it is attempting a recovery. We got above the 50% level today, and we rejected from this other trend line, which isn't the cleanest trend line that I have in here, but rejected regardless and bounced off the 50%. So watch this next week. I got into a little bit more of my position. I'm actually still holding from down here, but I added a little bit, and I added a little bit more today as we bounced from the 50%. And I just want to see if this can really mount a recovery. We obviously broke these lows, not the best from a structure perspective. Actually, no, you know what? My eyes are bad. We have slightly higher lows than this consolidation area over here. So we're still okay from a structure perspective. And if this is going to mount a recovery, I've really, been eyeing surpassing this high right here in this recovery, which I would put us to the 100% extension at $76. I know that's a ways off from here, but that's what I would be targeting if this can really turn things around. And from where we are currently, 70% to the upside. Not bad. All right, everybody was asking about RGTI today with the big move it made. Lots of names in the quantum computing space moving. And again, we had a nice little wedge pattern within this broader consolidation range that has been running since the previous breakout in the middle of July 16th. And we broke out today, and this wedge pattern has a target of exactly at the all-time highs at $21.50. So that makes sense as a local target and an area where we would anticipate some consolidation or correction for things to cool off on the RSI and on mean reversion. But from this larger wedge breakout that goes all the way back to the wedge that started at the beginning of this year in January, our ultimate price target for RGTI is still up here at $31. So I am just in a pattern of holding this right now and seeing what it can do. Now, one other quantum computing name I wanted to bring up that we really haven't covered before is IONQ. And this has also been in a massive wedge pattern since January of this year. And this just broke out from its wedge pattern where it was finding resistance, broke out yesterday actually. So it actually front ran the RGTI breakout a little bit. And this isn't going to get to its price target in a straight line. The daily RSI is already getting a little overheated. Mean reversion still has a little bit of room to run. But the price target on this one is up at $78.50. We are currently at $55.61. If we measure that out percentage-wise, that would be a 41% gain. So not quite as much in the tank as RGTI, but a good mover. And if this corrects down and finds support at these previous highs, that could be a good entry. I have a alert set there at $49. And we'll just have to see what this can do. But it's just getting into the upper cloud and might be going into a nice little uptrend again. Although it is a little overextended. I think it's going to maybe run for another couple days next week, but it should consolidate for a bit. Okay, bringing back up the trade desk because we talked about on Monday and we had our breakdown alert set here, our break up alert set there, and it broke to the downside. So not a great sign of strength for the trade desk. I now have an alert set at these previous lows from the 7th of April, which are around $43. But if we are treating this, just like we looked at our other names, as a bear flag instead of a bull flag, that would put the price target all the way down at $13. Whoops, not there, right? No. Oh, I actually kind of nailed it by accident, $13, which would not obviously be great, but they have really been struggling as of late. So if this breaks these previous lows, I am watching this as a potential short opportunity. It already on the daily obviously is fairly overextended. It's not going to get there in a straight line and it might have some bounces along the way. But if we look on the weekly just to see what that's doing, it still has room to drop on the weekly if we are going to have a, let's say, RSI double bottom potentially on the weekly. And actually, let's see where the confluence model cloud aligns. Ooh, look at that. So the Confluence model cloud, which often finds support or provides support and gives us a bounce, right now the outer band of that is at $15.94, so $16. And in a couple weeks' time, presumably that would be right at $13, which roughly aligns with that target. So if you are in this one, tread carefully because it might be breaking all these lows and be heading much lower. But then from that point, it could be perhaps a value play to hold for a bit longer term recovery. Okay, I was going to cover the treasury names again, but we have gone so long in this video, so I'm just going to do 3 of them really quickly for things to pay attention to. I know we said that CEP looked like dog do on Wednesday. I didn't even cover it. But the one thing I noticed, we just on the daily got a buy signal, and that had me double click into the 4-hour time frame. And if we're looking at the 4-hour and we're looking at the Confluence model center band, we off of our bottom broke into the center band on the Confluence model for the first time. This is very akin to what MicroStrategy is doing. So I put my money where my mouth is, just got a small position, but picked up 500 shares this evening just to see if it can mount a recovery. And the 4-hour, the daily RSI is way oversold, but fundamentally looking at the chart, this one has been way weaker than the rest of the names. UPXI bounced from where we were talking about on Wednesday and is starting to recover. This has a long way to recover on the 4-hour and daily RSI. So keep your eyes out on this one next week. And then Naka, which had that big move earlier this week, unfortunately broke down. I guess you could argue this might be kind of a double bottom here, but we broke down to new lows. And so it broke my invalidation. On Wednesday, we were saying it wasn't a good sign that it broke back below in the lower cloud. If we would have bounced off the center cloud, I would have been much more confident in a near-term recovery. But now I'm just watching this one to see if it can build structure, prove to me that it's going to turn around. It feels a little too risky to just get in it blindly. So I'm looking for that confirmation of a turnaround in structure for another near-term play. But these can move by crazy percentages. So if you can catch another little move up, even if it's just a dead cat bounce, I mean, that was 182% dead cat bounce. Absolutely wild. Okay, and the last lightning round treasury to watch that I also got into was BMNR, and we said on Wednesday that it was starting to bounce from this previous consolidation zone right here, and that was a good sign. It's been lagging because Ethereum hasn't been moving, but as Ethereum started to move, so did BMNR. We're just on the 4-hour into a live resistance here now on the center cloud. So if this compresses again between these bands, resets a little bit on the 4-hour, this could have another move in it to the upside, and that could be a good entry there. So keep your eye on it next week. Okay, moving on to some chart requests. We just have 2 of them. The first of which is SLDP, Solid Power, which has been really beat up. This is the weekly time frame. And you can see we found a ton of weekly support at just above $1 there. So a great basing pattern, and we were compressing. We made higher highs, actually lower low, but started recovering here on the weekly, but it's overextended on the weekly. We just look at this RSI, obviously it's overextended, and let's bring up mean reversion, which we don't have data for yet on the weekly. If we go into the daily time frame, the daily also topped out on the RSI back here, and we took our couple of swings in the upper cloud. So as we talked about this path of travel, a couple swings in the upper cloud, and now it looks like it broke into the center cloud and is finding some resistance. So this is not the point where I would personally enter a name like this. I would want to watch to see, is it going to reject? Is it going to consolidate? Yes, it could move into another uptrend, but it seems like it at least has some consolidation ahead of it, if not more of a correction before finding a bounce. I'm not saying it's going to get back down to $1. We probably bounce from this center cloud somewhere in this point. Yeah, actually makes a lot of sense with these peaks. So not something I would chase at this stage, even though it did have an impressive move. If you're looking at the short-term time frames, you can see it's breaking down on the 4-hour as well. 4-hour mean reversion did already give you a couple dots, but the RSI is not reset yet. The minimum I would look for is for the 4-hour RSI to reset, and perhaps that would align with a bounce off the center cloud here, and that would put you roughly at $3. So it's a big range between $2 and $3 for support with a small asset like this, but a little too soon for me to get in. We are still structurally in a downtrend, and it has a bit more proving to do. All right, and the other request was for RBRK, which is a cybersecurity play, I believe, and they had earnings and a breakdown on earnings. If we just look at this on the daily, actually yesterday when this was requested, I just drew in a little trend line like that. And yesterday evening, or I'm sorry, it was Thursday evening, we dropped a little bit more in after hours. We were actually bouncing from that. And I thought, oh, maybe this is going to provide support. But we broke down below the 200-day moving average. If this would have bounced right there, I would have said, this is a great play after an over 20% drop on earnings. But this feels like it wants to go a little bit lower. And from a structure perspective, you can see that since this high on the 5th of June, we've just been making, well, I guess still a higher low compared to down here, but low, lower high, lower low, and then higher high compared to this, but a lower high compared to where we were at the end of June. So it just couldn't do it to mount an uptrend again, and now has made another lower low. So this has a lot of proving to do. If it remains in the lower band of the cloud, I could imagine, sometimes we just bounce like that. But most of the time we will actually go into a downtrend for a bit before it recovers. And maybe that aligns with their next earnings in December to have things shown in a bit more positive light for the company. So wish I had better news on this one, but it's not one I would get in right now. I would wait to see how it plays out and where that eventual bottom forms. The last thing I guess I will say, if we are looking for a bit of a sign of hope, all these previous highs, we are just into that, and we are around the 200-day moving average. So historical zones like that and this volume cluster can often provide support. But just from a structural perspective, the price action isn't looking very strong right now. Okay, that is it for the charts. Next week will really be centered around FOMC on Wednesday. We will have core retail sales the day before, but I don't think that will make an impact on a week that is really hinging on rate cuts. I personally won't be trading into or right after FOMC, as my edge goes away on big market shifting events like that, but I will be watching it closely and I will be posting on X. So I hope you all have a lovely weekend. Bye for now.